Welcome to Remarkable Retail Podcast, Season 6, Episode 7, presented by Marketile. I'm Michael LeBlanc.
And I'm Steve Dennis.
We're off to the mall in this episode with our special guest, Tom McGee, President and CEO at ICSC, formerly known, or best known, as the association representing primarily landlords and shopping centers, now broadening their scope to marketplaces. We'll hear more about that from Tom. Steve, you and I have both spoken at ICSC events. How long have you been associated with ICSC?
Oh, I think I did my first keynote for them maybe 4 or 5 years ago, which was in Toronto, as I recall. I think we talked
that's how we met, actually.
Yes, that is actually. Is that where you were going with that? You want to just have the beautiful, you get everybody a little teary-eyed. Yes, right. I do believe that is correct. The night before, and then I've done a few others. So it's been good, and we touch on real estate a bit on the podcast, but I think this is maybe the first time, at least in a while, that we've done more of a deep dive, and I don't think there's anybody better to do it than with Tom. Yeah,
he brings a great perspective. It's a great interview, so we'll get to that after the news. Now, as you know, I'm just back from LA. Now, next trip for me is joining you in Vegas for Shop Talk, and we'll be podcasting together. But you're going to be on the stage there, and then another month later at Shop Talk Europe. What kind of knowledge are you going to be? What's the format for your presentations at those events?
Well, at Shop Talk Vegas, we're going to be talking about innovation, and I'm going to do a very short opening segment, and then we've got 3 panelists, one from a relatively new sexual wellness brand called Mod. Then we've got a senior brand person from UGG, mostly known for their boots. And then the head of strategy for one of our favorite brands, Tractor Supply. And then Shop Talk Europe.
Is that the talk show format where each comes up individually, or is it a panel format where
you're going very inside Shop Talk? It is not the talk show format. We'll have all three at once.
All right.
And then Shop Talk Europe in Barcelona in May. We'll be talking about more in-store workplace kind of innovation. And the panel is still coming together. So we'll share more details on that in a few weeks.
All right. Well, looking forward to that. And then we're also going to be in Barcelona for World Retail Congress. We'll be talking about that a little bit more detail on our next episode. You're speaking at that as well. So a busy spring. Speaking of a busy spring, let's jump into the news. Earnings. What are we learning from all these earnings?
Well, yeah, this is going to be a pretty brisk week coming up of earnings. But last week we had quite a few as well. We're not going to dig into all of them. The 3 that I thought were most worth mentioning, the biggest retailer on the planet, Walmart, reported, and they actually did pretty well relative to expectations. Sales were up pretty nicely. One of the things they do, which I really appreciate, is they break out transactions as well as average ticket. And, in this era of inflation, that's kind of helpful to understand. So transactions were up 1.8%. So, not amazing. Average ticket was up 6.3%. So you can kind of get a sense for the inflation there. But really strength across the board. Sam's Club did particularly well. Their grocery and private brand business was really strong. And also the ad business. We've talked a bunch about the retail media networks, a couple of episodes last year. They were up 20% year over year for the quarter. That's down a little bit from the 30% that they ran for the whole year. So still very robust, but maybe moderating a bit there. I think the 2 key things here have to do with what's going on with margin. And they did take a little bit of a hit. As folks may recall, there's this big inventory glut that a lot of retailers are working through. And it looks like they made some pretty good progress on that, but they did have to take a few more markdowns than are ideal. But the thing that really got Wall Street's attention was that despite having a pretty solid quarter and a pretty solid year, they guided down for this year, estimating that their sales and profits will probably only be up about 2.5% to 3%, which presumably will be less than inflation. So that kind of spooked Wall Street in general, and a lot of retailers were guided down. Now we're going to get Target this coming week. In fact, I think the day that this episode is out. So some of the people listening to this have probably already heard the news. So I think that'll be another kind of just bellwether for the broad market.
It's interesting when you talk, go back to what you're saying about up 1.8% for transactions. I mean, let's keep in mind they have approximately 37 million transactions a day. 1.8% ain't nothing. They already got a lot of transactions going through that store, and they're a big grocer, right? They're the biggest grocer by the numbers in the U.S. and there's lots of inflationary pressures and inflation built into those numbers. So it's an interesting mix. They're such an interesting business, so it's a great place to start.
Yeah, and I think there's definitely a sense, and in fact, I think they stated it, that they've been picking up market share in the grocery business. Mm-hmm. So
yeah, I
do think some of that is they've really worked hard to not raise prices very much. I think is a strategic move for them, and it's very on brand for them. So that seems to be working for them, at least in terms of their long term positioning, and maybe take a little bit of a hit in the short term.
Mm. So I was reading about Home Depot and their investment in their people. What is it? $1 billion to provide workers with hourly pay raises. They're really putting an exclamation point on the fact that it's very important to keep people because it's hard to find them to begin with, particularly in their format, right?
Yeah, I think that was one of the big pieces of news. I mean, overall, from an earnings standpoint, it was pretty lackluster, and they also, similar to Walmart, but for different reasons, because they're obviously very much tied to what's going on in the home market, not the broader market. They're pretty cautious about the outlook, but yeah, they said that they are going to raise their minimum wage to at least $15 per hour. That varies by market, of course, and that was going to add $1 billion to their cost structure. And strategically, it seems like this is something to do. I expect a lot of other retailers will follow, but it does put pressure on their margins, and so that also, I think, spooked Wall Street a little bit. But I think I guess kind of more of an editorial comment on this. I think retailers have been able to take advantage over the years of a pretty favorable labor market for them, and that kept wages down. And we've generally seen, not to sound like the Bernie Sanders of retail here, but we've seen lots of patterns over the last couple of decades of the rich getting richer. I'm not going to do a Bernie impression. I almost went for it. But and the low and middle class really taking it on the chin. So I think it's great that we've been able to see quite a lot of people move out of poverty level wages into closer to or above a living wage. But this will definitely put pressure on their margins going forward.
Yeah, two quick comments. One is generally retailers see the upside of when they raise minimum wage, because these folks aren't saving for their next yacht. That money comes right back into retail, right? They're living, at some degree paycheck to paycheck. So the more money they make, the more they're able to spend and start save money. And then the second thing is, this is a wise investment for Home Depot. If you're outside the industry, you might not realize it, but Home Depot staff on the floor are highly productive, right? They're upselling, they're answering questions. So it's a great way to just increase conversion. Like we've always said, like in our panel, our store technology panel, like if you're not getting more people across the doorstep, you better make sure that the people who are in the store are spending and buying and finding in a vast place like Home Depot the things they need to find. And I think it's a wise investment, right? I think it's a wise investment. A couple of quick hits. Now, we're not going to talk about Wayfair. Wayfair put out some numbers and a somewhat surrealistic investor presentation, but we're going to dwell on that a little more next episode because it's worthy of an entire episode. But any quick comments on what you saw?
Well, I think it was charitable to call Wayfair a train wreck. Their sales dropped, 5 million customers lost year over year. And to your point, which, yes, we will unpack a little bit more, as well as just kind of more broadly what's going on with some of these so-called retail disruptors. Their presentation was pretty much like, everything looks to be great. And oh, by the way, we lost $1.2 billion last year. So
no, sure, a hot spot. Let me tell you,
it really, I don't know. People, I think sometimes, because I've been criticizing Wayfair, I think coming up on 3 or 4 years now, that maybe I have some sort of vendetta. But once again, I should point out that I'm a bullshit dispelling enthusiast, and there was quite a lot of bullshit in their presentation. But more on that next week.
All right. Let's talk about some quick hits. I mean, I see Target investing in investment sortation centers. They're doubling down on their competition. They're fresh, and they're what they're doing and how they're moving product. What do you think of this investment? Do you think it's a wise? What does it portend? And do you think it's a wise spend of their money?
Yeah, well, if people are really interested in it, they can go back to our interview with Nancy King, the Senior VP of Product at Target, because last year we talked about this strategy of really leveraging stores for fulfillment of e-commerce orders. So in some cases, that's shipping from store through the mail, or going to pick it up. But a lot of it is being able to offer same-day delivery in market. And these sortation centers, which are dedicated facilities that basically gather product coming in from distribution centers or coming out of stores to then be redistributed to the local market, really gives them, kind of the antidote to Amazon. Because as I'm sure many people will know, Amazon's been building out. Turns out they built up too much, but they've been building out these local market facilities to facilitate same day and next day delivery, and in some cases within an hour or two. And the challenge really for the Targets and the Walmarts and many other retailers is, how do you offer that level of convenience? And leveraging their stores and these sortation centers looks like it's really, really working well for them. So yeah, they're going to invest another $100 million in 6 more of these sortation centers, and this overall kind of using the store as the hub for both online and in-person shopping. So I think a really interesting strategy, seems to be working really well for them, and they look like they're continuing to invest aggressively behind it.
Now, counter to what we've just said for the past 15 minutes about wise investments in conversion and customers, Amazon put out a short, quirky kind of note that they're eliminating a shopper user experience team, which I had, like, my head did a double take almost, like, you're doing what? Why on earth would you, of all things, look at that? So what did you make of that announcement? Am I reading that right?
We don't have the complete picture on this, but the person who, as I understand it, the person who led the team got laid off and basically shared on social media, or somehow or other a reporter got a copy of the what she stated was the elimination of this team. And yeah, it seems bizarre, given some of the challenges Amazon is having with, I think their site navigation is a mess. And, you could certainly argue, I don't know if this team worked on in-store, but it seems like a really good time for Amazon to double down on how to improve the experience rather than go in the other direction. So it seemed pretty bizarre to me, but perhaps we don't have the complete picture. So if anybody from Amazon is listening and wants to clean us up, please let us know.
It could just be that division, but there's another division that does basically the same thing. But hey, Amazon, give us a shout out, and we'll bring it up in our next episode. Shein, which I'm not a big fan of, lays out a 2025 target of massive revenue, $58 billion. They're just like, if I take that number and compare them to like other retailers, that's a big number. Like, it's a big number,
right? Here's a business, and this, I guess, just speaks to what I sometimes call the speed of disruption, which seems in many cases to be accelerating more exponentially than in a linear fashion. And here's a brand that barely existed, 3 years ago.
Yeah.
That is now, according to this report, it's not a report, Shein did an investor presentation where they quoted that this is, their goal is to have close to $60 billion in revenue by 2025. That would put them past the combined sales of H&M and Zara, which are kind of the two other fast fashion leaders, which have been around for how long have those brands been around? Decades, right? So
longer than Shein, that's for sure. Whatever the number is,
much longer than Shein. I think probably multiplied by about 10.
Yeah.
So it's quite extraordinary. There's a rumor that they may be angling for an IPO this year, and so they're kind of setting the foundation. But it's quite extraordinary how impactful this brand has become in almost no time at all. Yeah.
All right. Well, so interesting. Now let's go from we go from Shein to an excellent interview with Tom McGee, who's less about virtual, but it's included now, as well as shopping centers. So it's a super interesting interview. But first, a few words from our presenting sponsor. There are two types of retailers: those that are committed to transforming at the speed of disruption, those that aren't. If you're a retailer that implements significant changes by intuition, you may soon join the Hall of Shame of executives who bet the farm on initiatives that ultimately failed, so, maybe consider brushing up your resume. But if you are a retailer hungry for a better way to gain useful insights on the impact of your store layout, design, and innovation pilots, you need to know MarketDial. MarketDial is an easy-to-use testing platform that emboldens great decisions, leading to reliable, scalable results. With MarketDial, you can be confident in the outcome of your in-store pilot initiatives before rolling them out across your fleet. Validate your remarkable ideas with MarketDial's in-store testing solution. The proof is in the testing. Learn more at marketdial.com. That's marketdial.com. Tom, welcome to Remarkable Retail Podcast. How are you doing this morning?
I'm doing great. It's great to be with you.
Well, and where are we finding you today? Thanks for joining us, by the way. Where are we finding you today?
I'm actually in Midtown Manhattan in ICSC's offices.
Very nice. Now, is that where you're born and raised? Tell us a little bit about that. Where are you from?
No, I'm actually from Los Angeles, Southern California. I lived in LA for the first 40 years of my life. Mm-hmm. I moved to the East Coast in 2007. I started my career with Deloitte and spent 26 years there and moved for the firm to New York in 2007. Spent 26 wonderful years there. And in 2015, I was recruited to become the CEO of ICSC. And so I've been here through, lots of different, major periods of time in the industry, everything from the retail apocalypse that was called when I began to obviously navigating, through the pandemic to now, which I think are, much more promising times. And so I've had a wonderful career and had the benefit of living on both coasts of the U.S. and the two major cities of the U.S., and I like them both.
Well, and at Deloitte, right? Very, very senior levels. In fact, we had one of your former counterparts on, Ira Kalish, not too long ago. So we've had lots of great guests on from Deloitte, and now you represent an entire industry. So tell us some more about the work you do at ICSC.
ICSC is the international membership organization. We're a trade association representing the marketplaces industry. That is the marketplaces industry represents everything from where people shop, dine, work, play, and gather. Often referred to as retail real estate. And as we'll talk, the terminology retail real estate and shopping centers, I think, is really broadened to a much greater extent. ICSC is, provides a whole host of services to our retail and real estate members. We provide content. We provide create events and experiences that really help our members advance and grow their businesses. And we're very active in public policy as well. Mm-hmm. It's a huge industry. The marketplaces industry, if you think about, what's comprised of that, retail, food and beverage, a whole host of consumer services, that's about $6 trillion worth of consumer spend in 2022. And the majority of that happens in America's marketplaces. And probably 1 out of every 4 jobs is related to that industry.
Now, you also work on both sides of the border. I'm here in Toronto. I think you just did a big event in Whistler out in BC. So talk a little bit about that scope and scale. So Pan North American, talk a little bit about that.
Yeah. So we have over 50,000 members, about 3,500 members in Canada. We had a wonderful event in Whistler. We have 2 major events in Canada, one in Toronto in the fall, and where we take over the convention center there. And then we have a major event in Whistler and a whole host of local events as well. We provide similar services in Canada as well. Content, experiences, events to help our members grow their business. We're also active in public policy in Canada as well. And it's a wonderful, we have wonderfully active members and a whole host of a large number of volunteers that are really engaged in Canada. And then we have members from around the world as well. We probably have members of ICSC from almost 100 different countries from around the world. But predominantly, the majority of our members are North American, U.S., and Canadian based, the vast majority of them.
Now, I know of the organization well. I was with the Retail Council of Canada for many years, so an advocacy advocacy organization similar. Now, I and perhaps many of the listeners might know you for what you were formerly, let's say, that's what I want to talk to you about. ICSC. When I think of ICSC, I think of shopping malls and retail. But you kind of did a bit of a rebranding or repositioning. You keep you refer to marketplaces. Talk a little bit about that. Unpack that for us, just in case someone hasn't kept up with current events about the nature and the scope of the business.
Sure. Our brand is really, the name has not technically changed. We still go by the acronym ICSC. Our legal name is the International Council of Shopping Centers. But, when we really looked at who was our members and the composition of our members, that had evolved over a period of time. And so while we were, obviously our legacy is around retail real estate and shopping centers, the nature of the tenant base within those centers, the nature of the development community, as they've navigated more towards mixed use, the folks that were attending our conferences and events was evolving to be, much more inclusive towards this concept of marketplaces where people really gather. And if you think about, just what's happening in both in Canada and the U.S. around traditional shopping centers, they're really becoming more than just retail. They're becoming experiential. You're seeing an increasing amount of offices and experiential type offerings there, residential. And so that was really happening to our membership. And so we thought it was important to really modernize our brand, to really reflect the nature of our membership, but at the same time respecting our legacy. I mean, we are known as ICSC. We're well known, particularly in the U.S. and Canada, and obviously with the stakeholders both in the industry and in public policy. And we wanted to respect that brand and the brand that was built by our members, but also modernize it. And so, our focus has broadened to characterize the industry as marketplaces, with really leaning in on the impact that this industry has upon commerce and communities, really innovating commerce, serving communities. If you think about all the things that have happened in this industry and all the evolution that's taken place, from its inception, but particularly over the course of the last 10 years, the tremendous amount of innovation and change that's taken place. And then fundamentally, this industry really represents, a place where communities gather. And it also represents a huge source of funding, for all the infrastructure and public services that provide, for citizens and communities. So communities are a big part of this industry. And we really want to lean into those two twin pillars of commerce and communities.
So maybe just digging into that more and some of the things that you and your membership are focused on. I guess maybe the first thing, and you alluded to this idea of a retail apocalypse. I keep hoping by now that terminology is in the rearview mirror, but this general idea that physical retail was dead or dying, why do you think so many people got this wrong?
Yeah, it's really an interesting question, Steve. First of all, when the terminology retail apocalypse was really adopted by the media, I tended to think we were really living through a retail renaissance, which was, a rebirth and a reimagination of what was taking place in the industry. But I think that concept of an industry that was somehow in distress, in many respects, was representative of kind of the broader thinking about technology. And, technology was just changing all aspects of life, right? Not just shopping, but all aspects of our life. And so, people saw e-commerce and saw the convenience of e-commerce and just, made this broad assumption that it was going to eventually lead to the ultimate demise of physical shopping. And instead, I think it's done, something quite different. First of all, I think it forced the industry to modernize and evolve and innovate and become much more consumer-centric and customer-centric. But secondly, really the nature of physical retail and the use of physical retail has started to change. So we're using it for traditional shopping purposes for sure, but you're also starting to see retail being used as many fulfillment centers. And you think of things like curbside pickup and click and collect and so forth. That's all being driven generally out of those local, retail establishments. So I think there's an evolution that's taken place that's been driven, by technology, and there's been an evolution that's taken place. But I just think the concept of physical retail and somehow was going to go away or was going to become obsolete because of technology, in some ways was just driven by this general mindset that technology's had such a great impact. And there's been other industries that have obviously gone away as a result of technology. There was this assumption that this massive industry that was, sitting in everybody's neighborhood and a huge part of the community would somehow go away, and that we would have all these vacant storefronts across the United States and Canada, just obviously didn't make sense. And so, but I really think it was driven somewhat, by that broader kind of thought process around the change of technology, the pace of technology that's driven in other industries.
Sure. Well, as you know, you're preaching to the choir here to a certain degree. But one of the things I wanted to talk about, which I thought was very interesting, there have been a few times where I've either had my own narrow experience at a particular retailer or with a client, or just my intuition suggests a particular line of thought. And then it's nice that folks come along and sometimes actually do the hard work and put data together. And one of the things in this vein is the halo effect studies that you did. I forget exactly when those came out, but could you explain to folks what that was about and what some of the key insights were?
Yeah, we did a series of halo studies, which were really focused upon understanding the relationship between having a store and online shopping and having a store. And what we really found was that, there was a mutually beneficial relationship. And so generally, if you had a store in a geographic area, that not only generated obviously the foot traffic and the positive sales that happen within the store, but it increased the amount of e-commerce sales you had within that geography. When a retailer closed a store, not only did you lose the sales within the store, but your sales within that geography, online sales, also went down as well. And so there was that was the halo effect, that there was a very beneficial impact upon having a store to also the growth of your e-commerce sales, and then the obvious negative impact when that went away. And clearly you're seeing that. And that was a couple years ago. It was pre-pandemic when we did that study. And now you're beginning to see that really come to fruition and in action, across the retail industry in general, because of what the pandemic taught us, which is, the importance of having a physical location. It was interesting, if you would have closed your eyes, and when we were entering into the pandemic in March of 2020, and we were an industry, obviously, that was at the epicenter of what was taking place, the discouragement of people gathering together in community and the need to social distance, et cetera. But now here we are, today, and the industry's in a much, stronger position. It accelerated a bunch of changes. But you're also seeing, retailers looking to open up stores. And why are they looking to open up stores? Because one, they know what the cap is on e-commerce sales because we've experienced it over the course of the pandemic. So we know what the absolute ceiling is as it relates to e-commerce sales. But we also, retailers have really learned, one, it's super important to engage with your customers to build that brand. But secondly, the profitability or the lack of profitability of e-commerce, and as I know you've talked about in the past, it's the margin erosion of e-commerce is quite significant. So to the extent that you can use your physical retail that you've already invested in your store network to not only support in-person shopping, but to also fulfill customer orders is hugely beneficial to the bottom line. And so you're seeing the demand for physical retail, increase significantly. Occupancy in the industry is really accelerated over the course of the last 2 years because of this demand for physical retail. And of course, particularly in the U.S., where the financial crisis caused such distress in the industry, there's been almost no new supply, any meaningful new supply of retail space put on the market in the last decade plus. And so you have increased demand for physical space at a time where there really hasn't been more a supply put on the market for almost a decade.
Yeah, no, that's really interesting. So one thing I wanted to talk to you a little bit about is, as we've seen the blurring of the lines between physical and digital and this halo effect, how is that affecting, or is it affecting, the way your members think about how they get paid and how they measure success? Because I think it's still pretty common for folks in the real estate industry to have some sort of percent of rent or percent of sales rent factor, and then things like comp store sales and sales per square foot productivity are common members. But those things start to become a little bit harder to understand when you know that a physical store drives online and online drives physical store. Any thoughts on how that's evolving, and is it evolving?
Well, I don't know that it's changed much over the course of the last number of years. There are a lot of conversations happening around that because of what you just said on the blurring of lines, and you might initiate a sale online, but actually pick it up or have it fulfilled from a store, or vice versa, go into a store and make the order, and then it gets delivered to your house. And so there is a blurring of lines. I do think those conversations will continue to evolve. And I wouldn't be surprised if things change within the next, 5-10 years, but you haven't seen a fundamental change in leasing terminology, yet. Now, I will say that the pandemic has, again, in a surprising way, because of what happened during the pandemic and the need for, retailers and landlords to work closely together, and a whole host of areas, particularly small business tenants, but large tenants as well. You're seeing, a real strengthening of relationships between the two. And that's super important, not just for the reasons that you've raised around, leasing, the construct of a lease, but also because of, we talk about curbside pickup and click and collect and so forth. That has, implications on the configuration of a store, how much space you use for traditional aisles versus, warehousing, and also traffic flow within a shopping center, right? I mean, if you got a bunch of folks doing curbside pickup or click and collect and so forth, that changes parking patterns and traffic flow and so forth. So it's really important that, landlords and tenants work closely together. So I would say the relationship in my time at ICSC as CEO, and I'm going on my 8th year now, this is as close as I've seen the relationships in a positive way during my tenure. And I think a lot of it owes back to the challenges that they jointly went through during the pandemic, despite some of the headlines that.
Yeah, sure. So sometimes a crisis brings people together. So I'd like to get Michael back in here in a second, but I'm wondering, and also just being mindful of our time, maybe you can just kind of give us your hot takes or kind of quick takes on what's going on broadly within the retail real estate landscape, and maybe particularly talking about some of the different types of real estate, malls, power centers, neighborhood centers, those kinds of things. Any just kind of global statements you can make about what's going on and maybe what people should be paying attention to over the next year or two?
Yeah. So at the very macro level, 2022 was a strong year for retail. I think that consumers rediscovered the joy of physical shopping, and obviously retailers have crystallized their thought process around the importance of physical retail. So I think 2022 was a strong year. I think 2023, I actually anticipate it to be a good year as well. Consumers are clearly concerned around inflation, and this is a consumer-facing industry, and so inflation is a concern that will impact consumer behavior. So I'll make that as a macro statement. I'm hopeful, and I know you had Ira on recently. He mentioned he didn't think that the U.S. economy would fall into recession. We're hopeful that won't happen as well. We actually had Mark Zandi at a recent ICSC meeting, and he used the term slow session, that he thought that we would, skirt a recession. I think as it relates to, kind of the different segments, I think the other big macro trend that's taken place that really crosses across all different types of retail centers is, demographics. And obviously we all know that, because of the pandemic, some things have happened in the way people, where they live and how they work. And you've seen a real increase in the number of folks that are living in the suburbs. That was happening beforehand with, the millennial generation starting to buy homes, et cetera. And then people are spending more time at home as you see, less people going, commuting into work 5 days a week. And that has pretty big implications upon, this industry. One, where the vast majority of physical retail is in suburban markets. And if people are working from home, it gives them more flexibility in the middle of the day to go to the store and to run errands and to do things. And so that's super positive for suburban real estate. And we're seeing that particularly for, again, a kind of grocery anchored neighborhood centers. But for all sectors, but for power centers and for malls, et cetera, because it increases the amount of time that people can spend doing those types of things because they're spending less time commuting into an urban center. Urban retail has been more challenged, right? I'm sitting in Midtown Manhattan, and it's a much more challenging environment here because you don't have the work traffic, the office traffic, and how that plays out, I think will be, looking 5 years from now, what the ramifications of that will be. It's hard to see, but it's likely we're not going back to where we were, pre-pandemic, where people are going to be commuting into, major metropolitan centers 5 days a week. And so, I think there is some transition that will take place, in city centers, particularly commercial business districts. But I think the broad macro trend towards people spending more time at home and working from home ultimately is positive for suburban retail and for all the different types of suburban retail.
Let's follow up that point and talk about, transformation and innovation. I mean, we seem to be at an inflection point, as you say, who can see too far in the future. And your industry takes very big, long swings, right? It's lots of infrastructure and lots of investment and things like that. How do you think about when you sit down with the members and when you talk with them, and with your vast experience in the consulting world, how do you think about crafting a future strategy based on what you see today? And, in other words, what does innovation look like? We've talked lots of tactical innovation throughout our discussion today, but, as we kind of bring our conversation to a close, what are your kind of final thoughts, what you're hearing from the members? And as you sit with them and say, think forward a number of years, how do you move that process forward together as an industry?
Well, I think the most important thing is, what does the consumer want? So I think that the most important thing is to think about what current and prospective customers want. And so, I think we're clearly living in an information age, and technology is going to be further and further integrated into our lives. And so consumers are going to become much better informed, and they're going to expect a much more curated, customer experience because they're better informed and because, they can, in every other facet of their life, they have a much more curated experience. And so whether you're a property developer or a retailer, the experience you offer, in one geography needs to be somewhat curated to a different geography, and the experience that they offer to me might be different than the experience they offer to you, Michael, because of the information that they'll have access to, and should be utilizing to inform the customer experience. So I think you're going to see a lot more in the broad world of retail, just a lot more curated customer experiences. I do think at the end of the day, the one thing that doesn't change in the industry, good merchandisers, good locations, good customer experience, and those will still win no matter what. But you're going to be better equipped because of information and technology to personalize it, and I think that integration of the seamless integration of technology and the physical world is going to take place. I hope we end up in a world soon where we stop talking about the growth of e-commerce and the growth of physical retail and so forth, and just think about the only channel that really matters, which is the consumer channel.
Yeah, well said. And speaking of well said, I'd like to thank you for not mentioning the metaverse in this conversation, because we're not big fans of that. Anyway, Steve, why don't you bring us home?
Well, thanks, Tom, so much for joining us. The real estate industry is always a dynamic industry, I think, as it's related to retail in particular. It's just more and more interesting all the time. So appreciate your sharing your perspectives, and look forward to seeing you out in the world sometime soon.
Thanks. It's a pleasure to be with you guys.
If you like what you heard, please follow us on Apple, Spotify, your favorite podcast platform, so you can catch up with all our great interviews, including Organized for Growth, our interview with Satish Mahatra, CEO of The Container Store. New episodes of Season 6 presented for another season by our friends at Marketile will show up each and every Tuesday. And be sure and tell all your friends and colleagues in the retail industry all about us.
And I'm Steve Dennis, author of the best-selling book, Remarkable Retail: How to Win and Keep Customers in the Age of Disruption. You can learn more about me, my consulting, and keynote speaking at stephenpdennis.com.
And I'm Michael LeBlanc, consumer retail growth consultant, keynote speaker and producer, and host of a series of retail trade podcasts, including this one. You can learn even more about me on LinkedIn, and you can catch up with Steve and I in person at Shop Talk in Vegas, March 26th, and a month later in Barcelona at the World Retail Congress, April 25th. Until then, safe travels, everyone.